All right. Well, good afternoon, Joe.
Good afternoon, Mike.
Welcome to another mortgage update with Mike and Joe. We're officially into our second year.
I'm thankful I didn't have to do
this.
that. When Batman was here last time,
I know.
kind of bumbled through it.
I know. Well, there's no Batman today, but maybe there'll be a return.
I think we need to share with the audience why there's no. It was actually supposed to be a turkey today.
That's right.
Unfortunately, the turkey's not here. It's on the Thanksgiving table.
And why is that, Joe?
Because we did not hit our challenge. So we had a challenge out there. Our November goal was to hit 575 followers on our Instagram. We're currently sitting at 550, so fell a little bit short of that. And our YouTube subscriber goal was to get to 85. I think we're sitting at about 76 at that as well. So still some work to do. So we got one more month of the challenge left. So we're going to set it out there. If we can get to 575 and 85 by December, we may have another guest appearance for our Christmas episode.
Without a doubt, there could be an elf in the midst.
Potentially, yes.
There could be. So, so for those people that do subscribe, please forward it, share it, try to get others to join in, and we would welcome. It's the more, the merrier. But I did hear before we move on that our podcast apparently has gone international, Joe. We got 3 people that downloaded it from Sydney, Australia.
Wow!
So obviously,
getting big time.
We're getting some reach. So it's exciting.
What do you think somebody in Sydney, Australia, does with our podcast? Maybe they're thinking about moving here.
I think that they might be so impressed with it that they're probably someone's looking to copy and do some Australian version of their mortgage
most
update.
likely.
Yeah, I'm sure that's what it is. So Joe, the Bills.
Hold on. You remember this guy, the rally hat, right?
Yes.
Last year I pulled the rally hat out. But now, Mike, I gotta turn. We're struggling here. We're gonna take all the stops. We're gonna turn the rally hat inside out.
Anything is
this is terrible.
Possible. I mean, so the Bills are on a slide. They're on a slide. Backs against the wall.
Yep.
Not only must win this week, but
change of the OC.
They change of the OC. Hopefully that it can't hurt.
Yep. We got some big games coming up.
So my only thing is I'll make just one modest prediction.
Will they make the playoffs?
Will they make the playoffs? I mean, the optimist in me says yes.
Okay.
That being said, that will happen starting this week, and if they do not turn the ball over. If they simply do not turn the ball over,
they'll win games.
I think they'll win games.
Yeah.
So that's it.
I like it.
Okay.
I like it.
All right, Joe, let's press on to the task at hand. So the market update, obviously we're coming to the end of the year. I'll just make a couple comments before you talk about the actual stats in regards to what's going on. Obviously this week, favorable, small, but a favorable move with mortgage rates.
Yeah, we had some good news come out this week.
What caused those rates to come down?
So the biggest one was the CPI numbers came in less than expected. We are getting closer to that target of 2% inflation, which the Fed has been chasing. So some optimism out there that the Fed is done hiking interest rates. Then we had retail sales come in lower than expected as well. So a couple big pieces of news this week, and unemployment numbers came in higher than expected. So those 3 pieces have kind of shifted those rates down to now where I think I saw high 6 earlier in the week.
Right, exactly. So we're moving in the right direction. And again, there's no guarantee of this, but the prediction going into the new year, to your point, is that kind of the Fed is definitely on a long pause, and if this inflation continues to come down, we'll probably see rates continue to slide a bit more.
Yeah, so, I mean, that's great news as we head into the new year, especially for those buyers looking to take advantage of the Home Buyer Dream Program, which launches at the beginning of January this year, January 8th. Yep. So you could potentially go under a contract now with an end of January close date and take advantage of the new and improved $20,000 Home Buyer Dream grant.
That's huge. So, Joe, that being said, so what's going on with the market? What happened in October?
So, interestingly, in October, so in September, if you recall, we were in Monroe County and surrounding, we were about 8.3% over ask. In October, that number went up to almost 12% over ask. So a little bit less inventory on the market, maybe a few more buyers in the market. That competition increased a little bit. 14609, which is the East Irondequoit zip code, was our most popular zip code. We had 10 transactions there in October, and that was active, and that was 22.5% over list.
Really?
Yep.
Okay.
And then the 14616 was the next most active. We had 7 transactions there. That was 18.68% over list. That's the Charlotte area.
Sure.
And what's the other number that stuck out to me for Monroe and surrounding is, as you get into those higher price points, the $300,000 plus price points, the highest over list there was 5.62%, and the lowest actually there was one that was under list in Victor in Ontario County, 3.04% under. So in that higher price point, that percentage over list has come down quite a bit, so that's an interesting angle.
What about in Syracuse, Joe?
In the Onondaga County and surrounding, last month we were 0.58%, so pretty much flat.
Okay.
This in October we were 1.83% over, the highest being 20% over list. When you look at, again, those higher price points, same thing as what's going on in Monroe and surrounding. They're just not as big of a gap over that list price. Maybe because prices have kind of stabilized in that price range, whereas we're still seeing the houses being listed and the demand being a lot lower because of rates being where they are, and demand being a lot higher still in those lower price points.
Okay. Thanks, Joe. All right. So Joe, obviously what we've been doing each month is we've been talking about some of the GRB Power Tools.
Yep. I got to see if I can get a Buffalo Bills hard hat. This segment would be good.
That would be good, right?
Yeah.
A power tool, maybe with a little drill.
Right.
So obviously we rolled this out where we wanted to make certain that, there are specific, tools that we have designed, products that we have designed, programs that we designed to help the realtor list more and sell more homes.
Yep.
So about a year and a half ago, we rolled out rate relief. And as you recall, Joe, rate relief was GRB's response to when rates really started to shoot up fast.
Yep.
And everybody believed that rates would come back down within like the next year or two. We wanted to give our clients not only a reason to come to GRB, but when rates do drop and they do take advantage, when they refinance that loan, GRB picks up most of the closing costs so they can close with very little money out of their own pocket.
Right.
So, and that's been really well received.
Absolutely.
So now we're excited. So we just rolled out Rate Relief Plus this past month. And again, that program dovetails well with Rate Relief because what we're doing is basically we are doing what's called a lender funded, where GRB is funding a buy down account so that the actual payment is computed 1% below their 30-year fixed rate note rate. So
for the first year.
For the first year, correct. So that can really save folks in that first year, depending upon their loan size, several $100s a month that they can use towards other bills, other debt, and we're off to a great start.
Yeah,
with
that program's really hit the ground, and that lender-funded buy-down, what happens is a portion of that money or that difference in payment, let's say it's $200 a month, $2,400 goes into an escrow account. And every month for the first year, the borrower makes their payment $200 less what their actual payment is, and $200 comes out of that escrow account and makes that payment whole. And then what happens is if the borrower does refinance, if there's money left in that escrow account, it just gets credited to their payoff. So they never lose that money. It just gets credited to their payoff when they do refinance. So if rates did drop in 6 months, they could take advantage of the rate relief, get the low cost refi, and they're going to get that credit towards their payoff when they close as well. And, with, like you said, we have student loan payments coming back into mix. Home heating costs are higher in the winter, obviously.
Right. Sure.
So, having those lower payments, when you first get in the house, or two, if you're carrying two mortgages for a short period of time. Why not have that lower payment for the first year?
Right.
And the response has been great to that, and continue to see that product grow.
That's great. That's great. Good stuff. So, Joe, we also rolled out this month a promotion for veterans. Can you tell the folks a little bit about that?
Yeah, and we've done this in the past, and we love doing this because it's something to give back into the community, and for all VA loans, VA applications that we take between now and the end of the year, we're waiving the cost of the appraisal. So GRB will cover that cost of the appraisal, and it's not something that we collect at closing. We just cover that cost,
right.
And it's a great way to give back.
Yeah, it's a small way to say thank you to them. So as well. So Joe, as the other thing, we're going into this time of year. You mentioned obviously the Home Buyer Dream program is coming back. It's starting much sooner this year, but just kind of give everybody a sense of, because there's so many different options and grant programs out there. What's the best way for the realtors that are listening to this to learn more so that they can use them in the most effective way to generate more sales?
Yeah, I mean, number one, reach out to your loan officer, right? They have all this data at their fingertips, but there's a lot of money out there right now for housing, and the city of Rochester recently increased their grant from $3,000 to $6,000. Home Buyer Dream, as I mentioned, is going from $10,000 to $20,000. That's starting in January. Typically starts in March, April, so 3 months earlier. Maybe again take advantage of a little bit slower market before it hits spring. And then the Sunny May program, which is, we've done quite a few of these transactions where the homeowner can get up to $30,000 in a grant towards the purchase, down payment, and closing costs, and with only contributing 1% of their own money into the transaction. So that's huge. I mean, that's basically covers, you can get in with your 1% and not come out of pocket for anything else. And,
that's big.
That's a great program. And that's been off to a good start. They did have $10 million for that. I haven't seen an update yet from them as far as how much money is remaining, but we're keeping a close eye on that just to be sure that we don't have any surprises that money runs out. So, between those three programs, that's $56,000 somebody, if you combined all three of them, could get towards the purchase of a home.
That's huge. That's huge. So,
and then there are some exciting changes coming for next year with another grant program that we do, which we'll hopefully be able to talk about in the next episode.
Exactly. So each podcast, Joe, we kind of do these myth busters. And obviously there's a lot of myths out there, particularly in the real estate mortgage environment, and one is around servicing loans. We get a lot of questions from clients. Does GRB service their own loans, or do they sell them? And the quick answer is, as Joe, we do both. And I think it's important. We want to try to explain kind of the background on that, but also once we've done that, is to explain that servicing, no lender can guarantee for the life of that loan that they're going to service it forever. And I think it's important that people understand kind of the background on it. So you want to kind of share with?
I think when you back it up a little bit, it's really important to understand the why. We are a bank, right? But we don't have an infinite supply of cash. So the purpose that a lot of banks sell their mortgages is so that they can reinvest, right? You're able to sell your mortgage off to an investor that's willing to buy it, or Fannie Mae or Freddie Mac. You get that capital back so that you can write the next loan and continue to invest in your community or the communities that you serve. And so that's, one of the key reasons why a lot of banks do that is, right? You originate the loan, you sell it, you get, and then you can take that money and then reinvest it somewhere else, and that's through another mortgage, right? Not somewhere else, but through another mortgage, you can continue to do that, because without that, you would run out of money and have to say, "Oh, sorry, we're out. We got to stop lending," right? So that purpose of reinvesting back into the community is why we do that. And there are a portion of our loans where we're able to sell to Fannie Mae or Freddie Mac, and we actually can retain the servicing on them. Fannie Mae or Freddie Mac actually pay us a small fee to service the loan on their behalf. And we do that in some instances. And really, the other reason is to get the best rate for the consumer, right? There's times where, banks are willing to pay more or give a lower rate than what Fannie or Freddie are willing to give.
So in turn, we want to give the client the best rate, or at least give that option to them.
Correct. Yeah, and we want to give the customer the best rate that we can. Right. So being able to have those other investors that offer those lower rates that are lower than Fannie or Freddie.
Right.
And during that time, and it comes, it ebbs and flows. There's times where Fannie and Freddie is always going to be the lowest rate, and there's other times where a certain investor has an appetite for a certain type of loan, and they're willing to offer a lower rate on that.
Right.
So that's a key point there as well. And then our portfolio mortgages, anything that we write on our portfolio is serviced. We retain the servicing on and service in house.
Right. Okay. Thanks, Joe. Just for the folks that are listening in, we welcome any additional questions or myths that may be out there that you'd like us to talk about and address. The mortgage real estate industry, the one thing that's constant is that things are always changing. And what we're trying to do is to keep the folks that listen into this or replay it, try to keep them as current as we can, keep them as informed, as we can. So please feel free to share with us anything else that you'd like us to talk about.
Yeah, absolutely.
So Joe, that wrapping up our update and our podcast, I guess we'll both just be hopeful that Sunday produces a win
victory
with no turnovers, and we'll have something more exciting to talk about.
We want to wish our entire audience, even those in Australia, happy Thanksgiving.
Yes. I know it's kind of fun. We're moving into, obviously, next week. Holidays start. It's a busy time of year, but it's a fun time of year as well. So everybody stay safe out there, and we'll see you in about a month.
And don't forget to like and subscribe.
Exactly. All right. Thank you. See ya.